the miss was quite narrow. At the end of the day, they produced a 7.2% organic growth, and I think the expectations were 7.9%. When we look at the absolute numbers, we see Cucinelli at +10, Hermès at +7, Moncler, when it comes to the Moncler brand and direct-to-consumer at +4, and fashion and leather goods at LVMH at -5. So it's quite clear, I think, that LVMH is confronting issues with the Dior in particular, while Hermès, all in all, seems to be okay. Clearly, the issue that most brands are displaying is the weakness in China. That was the weakest region for all companies reporting. But that also comes from difficult comps in the first quarter. Chinese New Year in 24 was very good. Going forward, the silver lining is that comparables in China are going to get easier and easier. The big question mark, I think, at this point is what the impact on consumer feel-good will be from the stock market gyrations that we had in the most recent weeks, especially with the US consumers that are typically more exposed and more susceptible to what happens in the stock market.
Luca, on that note, you talk about how essential the Chinese consumer is to these luxury companies, but also how important the U.S. consumer is and how important it's going to be to watch the wealth effect and to what extent the stock market volatility does impact confidence and does impact spending in the U.S. What's sort of going to be a more important driver for these companies moving forward? What happens to the Chinese consumer or what happens to the U.S.?
Chinese consumers are still the largest nationality for most of the companies that we are discussing today. Just as an example, close to 40% in fashion leather goods sales for LVMH last year, 39%, I think, or so. So a reacceleration of Chinese spend would be essential and could potentially offset quite a significant amount of weakness from the American consumers. Which at the moment is not appearing, one has to say, because Liberation Day was April the 2nd, so the big stock market plunge happened in the second quarter. So we have yet to see that shoe dropping in a way. I was in China last week with a group of investors in Hong Kong, Shanghai, and Beijing. The conclusions we drew talking to a lot of companies on the ground is that if the Chinese consumers are rebounding, they may be rebounding according to a U-shaped recovery. There's no V-shaped recovery in the making, and if anything, consumer confidence continues to be very sluggish, very low. And so I wouldn't sit on the edge of my seat waiting for the Chinese cavalry to rescue the sector.